This is our trade activity for the week ending May 22nd, and then our anticipatory trade activity for the week ending May 29th. This is Greg for Teslafaninsight. Thanks once again for joining us. Wanted to say a special shout out and thanks to our Patreon supporters. If you enjoy the show, please take time to like and subscribe. So today is an interesting day. It's always nice to sort of review what happened and sort of what lessons you can draw from that for the past week, and then look into sort of future activity next week. So as you know, Tesla kind of had a range this week of, call it 790 to probably 840, I would say, on the high end. And I successfully went in and lost some money this week and on my Tesla trading. And the main reason is that there's a concept called the trend is your friend. So once you figure out the trend that a stock is on, you want to kind of trade that trend to be profitable. The challenge for this week was that it was hard to determine what the trend was and therefore how to trade it. And so as a result, you really had to sort of have, some great instincts to know when to get in or out of the stock to allow you to sort of make some money on what was going on. I know a few people in kind of our trading groups that were able to pull that off, but I just think that with the current trends for Tesla, it's very difficult to really figure out where it's going. There are two things I'd like to look at the past week that I thought were sort of interesting things that occurred that are kind of worth noting, thinking through going forward. Number one is that there's a thing that happened on Thursday where Tesla's stock price has been around plus or minus 15 bucks at 820 all week. And on Thursday, a really crazy thing happened where the stock price went from 820-ish, maybe 815, all the way down to 795, even 790. And then it ran that back up again to 820 in subsequent 2 hours. And so I was like, wow, that was amazing. So it was amazing because I guess it's happened with Tesla in the past, perhaps, but there seems to be something new that's been developed, because I actually saw it happen with Shopify. I saw it happen with Mercado Libre, MELI. And so now I'm starting to sort of wonder, or expecting it, if you will. And it's worth reviewing this because the question that pops up is, when that price jumps down, kind of the first thing that popped in mind for me was, wow, that's a pretty good price compared to what Tesla's been at in recent weeks. One small thought, about 2% of my thought was great time to buy, opportunity to make some money here. The second thought that popped to mind for me was, oh no, what often happens with Tesla is that there are certain very, very sharp folks who have information other people don't. And so they're able to trade that information quickly. And so all of a sudden, the stock price maybe dips. So it might be an Einhorn situation, or Elon Musk might have tweeted something. We don't know what it is. But as you know, a week and a half ago, a whole bunch of people lost a ton of money because there was a sensation that the price dip of 20 or 30 points was actually a temporary phenomenon, and you're going to all of a sudden sort of return to what the prices were previously, and everything would be fine. And instead of a 30-point dip like when Tesla was at 860, it drops into the 820s, and many of the owners at that point were thinking, oh, no problem, it'll come back. And it just kept going for another, 60, 80 points down, and cost a lot of people a lot of money. So I think it's very hard to trade, with courage when the stock price drops, because of this phenomenon of how news could very much sort of destroy the value of your portfolio quickly. And that's not so much for those of you who own the stock. Those folks are fine. I'm really talking about those that are trying to trade the option successfully. So my reaction when I saw that was, wow, that's an amazing number. Price is lower, might be a good time to buy. No way you can buy it based on what happened the last few weeks for Tesla and the amount of money lost in the process. And I kind of feel like for the average person, that's probably what happened. Clearly, there are some people that quickly bought and made some good money as that stock price rose. Congratulations to those of you who did that. What I sometimes do is if I see a trading situation start to emerge more often, it sort of puts into mind for me, well, how do you structure yourself to take advantage of those things happening? One thought that came to mind was if you actually, usually I have percentage-wise about 5% of my money in puts when I'm trading options, particularly in volatile periods like this, where the market has proven to be very unpredictable how it's going to affect stocks. And so one thought that came to mind is if I increased my put percentage to about 10%, maybe 12% of the value of the portfolio, what would happen is that the closer I get to 20%, I'm able to protect the money I have in the market, I want to say closer to 100%. And the reason that is that if the stock price falls, let's say 100 points like Tesla can, and you have puts 20 bucks out of the money in that range, you could end up with a situation where if the stock falls, let's say 40 or 50 points, not only do you get your money back if you have 20% put coverage, but you start to actually make a profit on it being down. So now one can actually step back in and buy with confidence, Tesla, and then try to ride it back up, and make money on your original calls because you've now bought into that dip and you're not worried about losing a ton of money because you've got puts that were already in place that are now in the money. So I really think that we're sort of entering a zone now where the days of naked calls or buying calls and having no hedge with a put of some sort, I think those are coming to an end quickly because there's a lot of volatility, very unpredictable, and it's way better for you to be able to get your money back rather than potentially losing everything because you didn't necessarily feel like you wanted to have some hedge against the positions that you held. So, I mean, clearly, this whole number could go different. You could go 15%, you could go 30%. There's a lot there. I'm just saying that I've seen this happening with different stocks more, and I'm kind of shocked at how much money is sitting out there and how pre-planning this situation could be very lucrative. I actually saw a situation that I'm still blown away by this week with Shopify, where we were sitting there, stock was at 741. Everything seemed to be going well for it to get back to my 745 price that I had 5 calls at, and all of a sudden the stock goes from 741 to 713 in about 20 minutes. And so I was sitting there, as I shared in a previous video, and I was saying, wow, right now it smells like this sucker's going to go bankrupt. And my other thought was that my put to call ratio was like 5-to-1. So I was like, shoot, another 30 points down and my put will become profitable enough to cover the losses I might have on my calls. So I don't care. I'm just going to sit here and wait it out. And sure enough, the stock went from 713, 725, 735, 745, 755, 760-ish. I think it closed the day out in like the 753 zone. But the general point, though, was that you had the stock do that run both up and down in about 2.5 hours. And what I keep thinking about, and the reason I bring this up, is that had you been astute, you're sitting there buying, call it 720 calls on Shopify, that 2 days later, the stock is now at 825, which is what it closed at on Friday. So you can see why I'm going through this. In the case of Tesla, I just reviewed on Thursday, it might have been Wednesday of this week, they went from 820 to 795, or just below it, I believe. And that happened at about half hour, 45 minutes. And then it retraced from that, 795, call it, to 820 again in 1 hour after that. So had you been there mentally, bought some 800 calls as it dipped below 800 and went both feet, you could have walked away with a 200-300% gain in an hour and a half. It would have been an excellent day. So I just think that it makes sense to sort of review trading for the week, determine sort of, how the environment looked for the past week, and then determine kind of what you want to do with that information, because you potentially end up in a similar situation. And if you're premeditated in terms of preparing in every way, you get an opportunity to make a lot of money. So let's jump into what we're seeing heading to next week. Now, as of next week, I guess we're 4 weeks out from the last earnings. We're 5 weeks out from the next quarter end, and then heading into earnings. And it's a big one because, as you know, if Tesla does well, we end up in a great situation relative to the S&P entry, and that pushes up the stock price nicely. The question then is sort of how you trade this environment. And there's an interesting battle that's going on sort of subsurface. And it's illustrated because I have one of our Patreon supporters has positions in Tesla out to like January of next year. And he's doing it a very conservative process with options, but he's getting great returns out of it, which is good. Plus it gets good tax implications because of how long he's held. There's a bunch of good things about what he's doing. I'd actually shared with him, I thought that he might want to sell some of his long calls and maybe go out to November, October or November, or even September, because you have plenty of time value, but the options are cheaper because you don't have so much time that's attached. And he's like, no, I'm good with my very, very long-term calls. And as an option gets that far out, you're almost in the zone where it's now not really an option, it's kind of a stock, the derivation of a stock by the time you have a year to figure out what you're going to do. So one of the frustrating or amazing things I've always found with trading options and even stocks is just the fact that there are certain people who understand options, and there are certain people and work them well. There are other people that sort of know how to trade stocks, and they've gotten dabbled a little bit in options. But I've always been amazed by the fact that there are certain people who move very slow, the tortoise and the hare, and they're moving slow because they're doing 3, 6, 9 months out options. And this allows there to be all kinds of up and down, but they're really riding the long-term trend of the company, which tends to be easy to win on. So perhaps in the short term, people who are on the short-term options are winning and making more money because they're able to sort of zig and zag with the market to make more money. But there's a lot of cases where the zigging and zagging in the short term can cost you an arm and a leg. The great example for me being, right after earnings when Einhorn and then Elon got together and made comments that destroyed the stock price. And I know a lot of people that were sitting there with options that were expiring on Friday after a Wednesday earnings announcement. And with the Einhorn comments and Elon comments on Thursday, I know folks that lost collectively at least $1 million. And the reason is that you make more money quickly if you're in the short term, but you also have all kinds of risks because you don't have time value that allows you to recover from that dip in the stock price. So I felt bad for all the folks that got hammered, but that's the challenge, is that if you're doing stuff in the short term and you haven't chosen to hedge comfortably and have a good process of it, you can get buried, and many did. And the other thing is that there's some folks, like one trader I know, who had options that don't count anymore. So an example would be, I had a trade in this week where I was making money on Shopify and the stock price was rising. So when I had, let's say, 790 calls, I had puts at 770 or 775. That way, if the stock price fell, I would be able to recoup my funds. And it is a volatile stock, which will go in a lot of places. And so what happens when that stock goes to 800, 805? Well, the problem is you actually have to buy new puts because the old ones are so far out of the money that you may not get back to that price before they expire. So now, like in my positions now, I have, let's say, 820 calls into next week. But now I have 810 and 800 puts. All the puts I had at the lower level expired worthless, and that was fine because I was making money on the other end enough to cover the cost of those puts. So to jump out of the options area and look at trading into the next week, I just want to note that I think we're in the same position we will be for the next 3 weeks or so, which is not a lot of company news to work off of. And there just seems to be a long list of potential bad things that are sitting on the deck. Things like, an analyst could downgrade. If Tesla stock price pushes beyond 850, a lot of hedge funds now have to employ underhanded tactics to try to reduce that price so that they don't get crushed by a short squeeze. Those are sort of, I want to say, on the bad side. On the good side, if we see the numbers running nicely from the factories of Tesla, you end up with that price pushing up as people anticipate that the S&P addition is going to push the stock price up maybe 20% by the time that occurs. So it's a very interesting time to be in Tesla and trading it. If I didn't have things like Shopify, MELI, Mercado Libre, and other things to trade, I guess I would be inclined to sort of try to figure out what I want to do there. But I have to admit, it's kind of wild to watch, some wealthy, smart people where Tesla would have a 10, 20, 30 point move on most days, try to make money where Tesla moves 10 to 15 points. And it can be hard to figure out which way it's going, how long, all this other stuff. And therefore, when you have a tight trading window like that where there's not much movement, you rely on delta and heavy movement. So you almost have to sort of get off of it, come back to Tesla as there's movement within which you can make money. So, so I just think that we're in a very tough trading zone for the company. There's a long list of potential negative things that could happen to lower the stock price, which makes the trading even more challenging. But, I think it's a good company. I think everything's running pretty well. Keeping my fingers crossed about no more shutdowns to mess up the quarter's earnings. So we're rooting for Elon and company to successfully navigate this space. At any rate, we very much look forward to your commentary. This is Greg for Teslafaninsight. Just a reminder, 25 legless a day. I'm going to go do mine now with my walk. Also want to encourage you to consider 5-2 or some other diet. A fish oil pill might not be a bad idea. Also, perhaps some weightlifting to help with bone density might be something to consider. Also wanted to encourage you to go for the SPF greater 30 or greater if you're going to be out during the long holiday weekend. Anyway, once again, thanks for joining us for our trade blast for the week. This is Greg for Teslafaninsight. Tschüss, macht's gut. Au revoir. Lehit road. Chodaf. Fez. Hey do. Zdravstvuyte. Hello in Russian. Ni hao ma. Hello in Chinese. Dobrodzenia. Have a great day. Bye for now. Thanks for joining us, and we look forward to your comments. Please remember to like and subscribe. Have a great day. Bye for now.